All right. Hey guys, Cheesette Cowan, CEO of Real Estate. Excited to be back with another video and talk about business planning tips for realtors. I think this is going to be a great video. I want you to get a paper and pen because you're going to want to take notes on this one. I am going to just go over a few things that are essential when developing your business plan as a real estate agent. First of all, you're going to start with a couple of numbers. And if you pay for the membership for the year, I sit down and do this one-on-one with you. So the first thing you're going to do is decide how much net income, that's profit. Profit is not the same as revenue. Revenue is all money that comes into your business. Profit is what is left after expenses and operating expenses are accounted for. So for example, I told you I'm always going to use 10,000 because it's a round number that I can easily divide. When you have a business and you get a $10,000 commission, you should have 4 different accounts. You should have a gross account, which is the money, the revenue comes into it. So the $10,000 commission goes into this revenue account. I call it a gross account, but revenue account, right? Gross commission income. Your whole 10,000 goes here. Then you should have the easiest way to do it. Now, I have a P&L, I have a bookkeeper. I do not do this myself. I'm telling you what I teach people in our membership platform. And this is just an easy way to do it. You're going to have an expense account. So from that $10,000, you're going to transfer $3,000 to an expense account. That's 30%. Expense account is everything that recurs that you can plan for. Your MLS dues, your phone bill, your cell phone, your office bill, your data entry system, your whatever systems you're using for your business, like all things that happen every month, your car insurance, that's going to go into an expense account and you're going to pay all your bills from that account. If you're like me, I have a Platinum American Express. I charge everything on the American Express and then I pull it from the expense account to pay it off at the end of the month, just so I can get the points, just so I can be good with Amex. The next thing is you're going to put 30% into an operating account. The operating account is an account that you will only use for sales related expenses, meaning these expenses only happen when you have a sale. You do not pay broker fees on a commission if you don't have a sale. You do not pay referral fees if you do not have a sale. You do not pay transaction management fees if you don't have a sale. Now, that's going to come out of a cost of sale account called an operating account, because that's for the operation of your business relative to sales. Now, I was going to say something, but I'm not going to say that because I don't think it's relevant with this audience. Then you're going to have what's left. It's called a net account. And when I say a net account, you can call it a gross account. You can call it a revenue account. But that $4,000 that's left is going to stay in that account. You're going to have a tax account. The tax account should always be empty. The only reason that the tax account exists is that when it's time to pay your taxes from your net or revenue account, you're going to transfer the amount of money that you're going to pay taxes, that you're going to have to pay in taxes. So $3,000 into an expense account, $3,000, which is 30% of $10,000, into an operating account, $4,000 stays into a revenue, profit, gross account, whatever. The fourth one is a tax account that stays at 0. This is important because this is the breakdown of how a dollar should be seen in your business. 40% is profit. Profit is what you pay taxes on. That's why it's going to stay in the profit or gross account. And that's why taxes are going to be paid on that. Expenses are only expenses, operating, things associated with sales, and then your tax account is going to stay empty. The reason why this is important is because if you don't understand how to break money down, it's going to be hard for you to develop a business plan. So then now when we go into developing this business plan, we're going to look at, and I'm just going to use $100,000 as a round number, that in order for you to make $100,000 net, you're going to have to gross $250,000. 75 of it will go for operating expenses, that 30%. 75 of it will go for expenses, that 30%, and 40% of it will be the $100,000 net profit. So in order to receive a net profit, mind you, net means all your expenses have been accounted for and this is what's left to you. You need to gross 250, 75, 75, and then 100 are how it's broken down. So now when you start to develop a business plan, if you're going to work with a business that has half buyers and half seller business, that means out of that 250, 125 is going to come from seller business, 125 is going to come from buyer business. If the average commission for sellers is 3% and the average commission for buyers is 2.5%, your volume for sellers is going to be 4,166,666. If your commission is 2.5%, for sellers, it's going to be 5 million. So if you're going to make a gross profit of 250,000, you are going to have a sales volume of 9,166,000, which is just under 10 million. Hopefully y'all following me, but if you're in the membership, we've already done this one-on-one. So now you're going to take the 4,166, that number, and then the 5 million, and then you're going to divide that by the average sales price. In Tampa, we're going to go at 435. So if I take 5 million and I divide it by the average price of a home, which is 435, I need to sell 12 homes to make 5 million. If I take 4,166,666,000 and I divide that by the average sales price of 435, I need to sell 10 homes to make that one. So you can already see I'm going to have to sell more money as a buyer's agent because I don't control the commission, but I digress. Now, that means I have to sell 22 homes in order to make 250,000. If I got to sell 22 homes, that means I need 33 signed contracts. Remember, I talked about conversion rate, 70%. If I have to get 33 signed contracts, that means I got to go on 48 appointments. That is my schedule for the year. My year is spent trying to find 48 people to go on appointments with me as a buyer or seller. That's a business plan in short. We go a little deeper because we go into how you get those 48 appointments, the systems, the strategies, the priorities that you need to focus on to get that. But this is the fundamental elements of what a business plan looks like. You need to know how much money you want to make. You need to know how much money you're going to have to spend on expenses and operation costs. Then you're going to need to know, or at least project to a close degree, how much profit is going to be left after all that. Once you understand that, then you need to break it down by buyer and seller business and start to now look at the activities that you're going to have to do every day to make that money. Business is simple. It's not easy, but the planning of it is a requirement. Most people fail in business because they do not have a plan. Every October, we develop a plan for the following year. When the year starts, all we do is stick to the script. We execute, we run the play. I'm not trying to figure out what I'm doing every day. I know exactly what I'm doing every day. So for me, this is the number one way to start to develop a business plan. Now, again, I told you, we break it down into what you need to be doing every day. We go into your calendar. It's a lot more detailed, but we're doing this in the membership site. So if you are not part of that community, if you want this kind of detail, if you want this kind of data to know your numbers and exactly what you need to do to grow your business, that link in the bio, click it, join us.